Hello everyone and welcome back. My name is Greg Furman and this is the Forex Weekly Outlook for the week of June the 18th, 2018. Now, to get started this week, we're going to begin where we always do with that all-important US dollar index, as it's basically the dollar index is wreaking havoc right across the commodity and equity markets and a number of different currency pairs. So the first thing we want to look at is we've got a double support down here at about 92.60. The VantagePoint AAA cross took place right in this area here, coming in on the break of 93.26, sending us all the way up to almost the 95 area before we retreated. Now, this is a very significant support or resistance area, excuse me. You can see that basically we've been up in this area just a few short weeks ago. Now we're coming back up off this double bottom to try and retake this area. But again, as we look back over a longer period of time, this move does still appear to be somewhat corrective in nature on the dollar index. We've got a good rally going, but again, a lot of that has to do with the ECB, a very dovish ECB. But when we look at the main indicators from VantagePoint, again, the AAA cross is completed with a good strong support at 93.52. Our predicted short, medium, and long-term differences and our neural index are moving higher. But our RSI is showing a lack of momentum, which is a little bit of a concern, but I think the dollar still has a little bit of life left in it. Now, as we look at gold this week, again, we've been in this very narrow channel here since basically the beginning of May. We've broken through that in thin illiquid markets on Friday, so we have to see now if gold can recover. But that main level here is 1302, that long-term VantagePoint pivot area. We're looking for a retest of that, but if we can't get back up above that area, gold could see further downside. Now, again, the AAA cross on gold took place all the way back here back in April the 20th. We've had multiple retracements to that key VantagePoint long-term pivot area only to fail again. Our predicted MACD is crossed over, our predicted RSI breaking through the 60 level, so gold is showing momentum to the downside. Now, not all the commodities are getting hit, but oil again, when gold was pulled down, oil went down with it. Now, oil was originally rallying with the US dollar until we came up to the VantagePoint long-term pivot area at 66.84, and we have failed and pushed lower. But as you can see, we still have very, very strong support at 64.16. Only a break of that area there. We'll see further debt losses on oil. But again, the indicator is very mixed here, but I think that oil will remain somewhat sideways. Now, with that dollar strength, not surprisingly, the VantagePoint is warning us days in advance of this equity sell-off here. Now, we're not completely bearish yet. As long as we're above 27.57, then there's still a very minor upside bias on the equities, but clearly with that dollar strength, the equity markets do not like that one bit. So again, the key level to watch, 27.57. Now, as we move into our main Forex pairs, again, a lot of action in the euro this week. We broke down, but what I will point out is that we have significant support around the 115 area, and we're not showing a break of that just yet. So we came down and kissed it on Friday, but then bounced away from it. So a good move off this double support area, but VantagePoint is calling for further weakness in the euro, a very dovish ECB, surprisingly dovish ECB, putting pressure on that. So when we look at the upside pivot areas here, 117.21, 116.82, and 116.32, a very bearish close of 116.06. So again, we'll be looking for a retracement this coming week, potentially back to 117.21, but it could be a tall order given how hawkish the FOMC was and how dovish the ECB was. So when we look at the two, 116.82, probably a decent sell area to start the week. Now, with US Swiss franc, that's got a bid here as the euro sold off on the dollar strength, but we have significant resistance up to the one just over the parity level. So we really do need to watch euro US if trading this pair to see which way we're going to move with it. But for now, it's basically as the euro US moves lower, US Swiss franc moves higher, with the key support now coming in at 98.92. The VantagePoint indicators are in a minor overbought condition, so a corrective move lower before we go higher is very likely. Now, when we look at the pound dollar this week, it's been a stubborn one. It's still, even though we've broken down below that channel, you can see we're still holding down on this low area, this swing low going back to May the 29th, that area coming in around 132.05. So all eyes are going to be on basically the 131.89, 132 area approximately on Monday. But watch out for a bear trap down here, because if there was ever one going to be set, this will be it. Still, the pound is still being dragged around by Brexit fears, but as you can see, the predicted RSI bouncing off this trend line down here. But most of the indicators still remain bearish except for the predicted MACD. Surprisingly, it's crossed to the upside, but again, Brexit will be a big driver on this particular pair. Now, when we go into the dollar yen for next week, we've got to be careful of this one here, guys. We've got very significant resistance up here around this 111.50 that still hasn't broke. We do have a triple AMA cross moving higher, but again, despite this dollar strength, we didn't set any new highs over the last few weeks. Very surprised, and we actually have a bit of a double top forming right around 111. We've got our medium-term trend weakening against the longer-term uptrend. So a little bit of caution there is certainly validated here, but the predicted MACD still remains firm with the crossover to the upside. But what I will warn everybody, based around the intermarket correlations, we really do have to watch the equity markets if trading anything related to the Japanese yen. If the equity markets sell off, the yen will strengthen, and basically the yen cross pairs, all of them will move lower, including dollar yen. So be very careful with that. But right now, we've had a couple of good retests of these key vantage point pivot areas between 110.27 and 110.01. So we should move higher. But again, a little bit concerning with that signal that I'm currently seeing on the equity markets with VantagePoint. So when we go into our main commodity currencies, USCAD's had a tough week here with the trade wars, really taking it on the chin here. We've broken through that 130.60 area, and we even managed to break through the significant resistance at 131.24. So 131.24, the breakout point, will be our downside pivot area also. Our key vantage point level, it's way down there now at 129.78, and that trails all the way to 131.09. So 131.09, excuse me, that could be your entry point for longs to start the week, as the Canadian dollar clearly in trouble as these commodities sell off, a trade war with the US, very little supporting the Canadian dollar right now. However, there is the seasonality of summer driving and oil prices, so we still could see the Canadian dollar recover, but that's unlikely going to be next week. Now, as we come into our other two main commodity currencies, again, we've got the Aussie dollar and the New Zealand dollar, very similar trades. Right now, we're moving down towards our May 9th swing low here. We'll see if we can get a bounce there. Our indicators from VantagePoint are moving into oversold territory. Now, what we need to be buying Aussie dollars, we need to see gold flatten out. We need to see oil recover. And more importantly, we need to see those equity markets remain above 2740, 2750, and just remain to keep that bid tone. If they can keep that bid tone, that should support the Aussie over the medium term, but the short term, we are likely coming down back into those May 9th lows, but again, with an oversold condition. New Zealand, basically the same deal here, guys, but it's not quite as severe. The upside pivot there is 69.92. We're closing 69.34. Still very dovish overall. But what I will point out again, New Zealand has more room to move on the downside, in my respectful opinion, than what the Aussie does. But both Aussie US and New Zealand US are being affected by the cross pair Aussie New Zealand. So keep a close eye. If Aussie New Zealand is going up, we want to buy Aussie US. If New Zealand US is going up, we want to sell Aussie New Zealand. A little bit of a complicated trade there, but not that much. So again, we've got a busy week next week, but a week that has very little economic data. The pound will mostly be the focus, a little bit of Canadian data, but not too much coming out of the US. So we should basically fall into more range trading next week, but we have to see if the US dollar is going to go into a trending move. So with that said, this is the Forex Weekly Outlook for the week of June the 18th, 2018.